Pasha Paro, YNet7. Thank you for tuning. The replay. So, guys, I want to say, big board pep for my peeps. Nah, seriously, look, I be talking to people, right? And I happen to mention something along the lines of, sometimes I go home, spend 2-4 hours researching and preparing, like, for your plays. They're like, oh, that's a lot of time. And I never look at it like that, because everything is an investment, right? So if you had a part-time job and you were doing 2 to 4 hours a day, how much would you what would your gains be from the time you invest in that part-time job? Let's say you got your regular full-time and you go and get a part-time. You think that to yourself. I'm not asking your personal business, but what would that be on average? And to me, when you look at it like that, or if you're starting another business, or if you have a business on the side, or whatever it is that you do in addition to your 40 hours and maybe overtime a week, what do you actually gain? So, and then, okay, so why are you talking about that, Pasha? This is why. So we got some things to cover today, and I'm going to give you some tools that help you secure the bag. You know what I'm saying? And that's why I'm giving you this intro to today the way I am, because I want you to think about something. And then if you haven't already, remember, guys, if you're really experienced, great. Thanks for, viewing the channel. Make sure you subscribe, click the notification bell and everything. However, if you're new, there's going to also be times where I give you information like you're going to get today that actually all of it should be informative. But if not, there's going to be days like today, which may be especially informative for you, where I give you some tools, you know what I mean? And some perspectives all the time. But I'll give you some tools today. It's stuff you heard me say before, but I'm going to take a moment to break down how I utilize it and how it empowers the success that I'm having, and how it goes hand in hand with investing time into knowing what you're doing instead of just jumping in. You go in there, somebody says something about a stock, you go push a couple buttons on the computer and you're in. And then you're hoping that 6 months from now, at that point, that's all you have is a hope, right? You got emotionally attached to something you heard, something you saw. You go click some buttons on the computer. Maybe some of y'all still call a broker or something. I don't know. And your cell phone, your Cash App, your Robinhood, whatever it is. And at that point, you just have hope. Now, when you do some research and invest some time into yourself, into your product, you have more than hope. You have the ability to execute. And that's the difference. Okay, so we're going to talk over some stocks real quick, and then I'm going to tie this all together for you. So the first one, BNGO. Now, you know who you're talking to when it comes to BNGO. We ain't even got to go into that. We've been killing this. It's been crushing, and we've been crushing it. And that's what we're going to keep doing. At least for a little while longer, because it's getting close to $10 a share. And my strategy, I don't know. We'll see how it goes. So this P.E.P closed the day at $6.95 after a high of $7.95, right? Because you're waiting for the FRSX update, and I got that for you. What was interesting is that these were basically twins today, BNGO and Foresight. So we're going to start with BNGO. We're going to go over some things, and Triple D, 3D had a killer day. It had an $8 plus day today, and I'm going to tell you why that was like insignificant. We're going to go over some real powerful perspectives today for the new people, or even if you're not new, it may open up some light for you. So pay attention and watch. Make sure you watch to the end, subscribe, and share it with people that you know that maybe had these questions with you. We can all grow together. That's what this channel is about. It's my log. It's for your entertainment purposes only. I'm not a professional advisor. That's not what I do. It's just a good, cool hobby of mine. And I'll be taking some serious notes for myself. And I share them with you guys. It helps make me better. So if you could help, if you're benefiting from this, like I said, go ahead and subscribe. Hit the notification bell. Hit the like button. Put some notes in the comments of your own. That helps the channel grow, even if you don't want to share it with somebody else and you don't want to help someone else grow by sharing it with them. All right, let's get into it. So this P.E.P closed the day at $6.95 after a high of $7.95, and you could have gotten in today as low as $5.54. Yep, that's right. So the highest volume since the 11th. I know that sounds like it was only a few days ago. However, much changes it by the minute. So a few days ago was an eternity. So yesterday's post-lunch climb was the sign. If you look down there right around right after, well, it says 13:30, so right after 1:30, you see a little spike, a little jump. That caught my attention, and then it was kind of a slow, gradual increase, and then a spike right after hours, right? So when I saw the spike right after hours, and this is just not no science, this is just my observation that made me want to pay BNGO extra attention today, because I've been watching it like everybody else probably. It's on my list of things to check on, and which is another tool that you can do for free, is just make yourself a list and just follow up on it. And if you see some price action, then do some quick research and see if there's any news on it. Or in a case like this, like we've been watching BNGO, we've been waiting for it to move. We know if you go back and watch the other BNGO videos I've done, you can see that we have an idea of what to expect with this. And we're just waiting for the right moment. It's all about the right time when you're executing instead of hoping. You see what I'm saying? So see the little spike right after hours, but it didn't hold. It kind of collapsed, but then it remained flat, right? And what I was watching was there had been some small drop prior to that, but this one kind of held flat. It went through the pre-market today relatively flat, and we had some nice jumps right away. So yesterday I was interested in watching BNGO. So pretty much right after that opening chaos where you had the green and that little red drop, and then it went green, like I'm in when it got to my green box there. All right. Then it went up, had a nice little slam, but it was still up. So I'm comfortable with that. And we pretty much rode this all the way up to, you see it shot up to $8, like a huge leap from basically $7.50 straight up to $8, right? Then it dropped basically right back down. We're still good with that. We're still up, and we're playing it. And somewhere around, you start to set your limits, and I'll show you that in a second. So as this is going up, I'm giving it room to work. And what I said in the notes there is it triple peaked at 8. So you had 1, 2, 3 times that it hit $8, and pretty much between that being the third time and it being so close to what I tend to call the sell-off period, right? Everybody trying to lock in profits, which you can't be mad at them. After that triple peak, it was pretty much a wrap. But by then I was already out most of my shares, and I pretty much sold off the rest like right around in that downfall because I had a stop a trailing stop loss on it at that on the remaining shares at that point with a pretty good percentage, maybe 7% at that time, which whatever it was about 60 cent that it could have dropped before it triggered, and that was pretty much what it did. Right there, that last red top there, and then it came down. So, but by that time, most of my shares were sold, and the profit was already locked in. And I kept that little portion just in case it started to scream up, which it does. Things do sometime as a push to maximize profits by the end of the day. But I kind of knew what time it was there. So I think it's gonna have a good footing at 7-Eleven, and it needs to get back to 765 and hold that, it needs to get back to 765, and then once it does that, it's gonna have some work to do. But I want to see it hold and secure 792. Like, hold it. Don't hit 8 and then drop back down to 740, 775. But once it holds 792, I think the next stop thereafter is going to be somewhere between 882 and 1023. So once we see some real footing and stability, basically above $8, you're probably going to get a chance to get a good grab at 80 cent to basically $2 and change if you get in right at 8. I'm not saying play the 8. I'm saying wait, do your own thing. This is not advice, but I'm looking to see when it holds above 8. So that might mean that it jumps above 8 and goes to 820 and then drops, or it might go to 820 and pause and then keep running to 830. I might get in at 830 or something. I don't know. We'll see what it do. Now, there's a little bit of a slippery area down there in the red. Be careful with that area if it does drop early AM. So look for it to find a floor and then jump your way in when you're ready. Okay. But yeah, I think if it continues to go, if the P.E.P continues to carry it higher, 882 to 1023 will be the next zones that I would start to lock in at, lock in profits at. So now the next one, right, is FRSX. Now this was yesterday's card, okay? I just wanted to pull yesterday's card to just give us a transition into what we're talking about today. I had a funny comment on one of my posts with yesterday's video, with this video, and it was like, oh yeah, it's easy because you're telling us after the fact. And I was like, I find that amusing because that shows that they haven't been watching the channel because, well, we've been talking about this since December. So we've been getting this. This has been our it's been we've been stacking off of this for a while, and I just referred them to go back and watch the other videos. And that also is why I am giving you the detail that I'm giving you today, because I don't want you to come to my channel and depend upon me. You see what I'm saying? I don't want you to have to wait for me to post a stock for you to get into it. I don't want you to have to wait till I tell you when I'm getting out of it for you to feel like when you should get out of it. I don't want to do that, because you see, in my mind, I gave you like bingo. Let's say, for example, I didn't talk about bingo yesterday, but we talked about bingo for a week. I mean, we made bingo, gave us 10 grand almost. You know what I mean? Like in a week period of time. Why? Because of planning, timing, and execution. Now, if I bring you bingo 2 weeks ago, I don't feel responsible to have to tell you to watch bingo. I think that's your responsibility. Okay? So, if you're new to the channel and you're watching this for the first time, I mean, that's what you got to keep in mind. I'm doing research. I hope you do research. I'm bringing this to you, but I'm not one of them people or them channels that's going to keep running down the same stock every day every single day. This is what it is. This is what it is. It just did this. It just did it. Look at it. See what it did. Massive, massive stock move, and it's every day, and no matter what it does, up, down, whatever, it's the same. So I'm not doing that. That's not what I do. I really am looking for certain things at certain times, and if I post something, like I said, it's your responsibility. I'm just here sharing my log, my findings, and hopefully it helps you. But I don't want you to be dependent upon me. I'm showing you this stuff. I'm showing you how I execute because I want you to be independent. I want you to be free. You know what I mean? Like, we're going to get into this. See, our goal here, I keep saying our because I know it's us. We're a group, all of you and me. So our goal is 1 to 500 a day, right? Because if you can do that, if you're new, if you're old, you heard me say this a few times, but the plan is if you can do 1 to 500 a day, no matter what the market is doing, if you can average that, then you're going to build your account up with low risk. The objective is to have the lower risk, high ROI, and you're going to build your account up securely and safely over time. I'm not saying we got a lot of time because, Biden coming in, and I'm not. It's not a political statement. It's just they're already great. Print off another $1.2 trillion. They just printed off like $5 trillion. It's great to get messy, and a lot of people are up here feeling like that's a good thing. All these stimuluses, but when it comes back around, really shortly, they're gonna. I don't want it. I don't want none of it. So personally, because it's gonna cost more than it benefits us, but people don't see that yet. That's what I think. That's my opinion, based on evidence and research that I done. Okay. So anyway, let's get back to this. Because look, we'll get to this in a minute, but like that's today, and that includes some loss on another stock, a few $100s. So let's get back to this though. I want you to be free. So if we set a goal of $1 to $500 and you execute, you could easily consistently see days above $500. We've had $5,000 days here. You see what I'm saying? But the goal is 1 to 500 because that keeps us grounded and in touch with reality, and it keeps us in a mindset of discipline. And part of that discipline is knowing why you're actually in a stock. And a lot of people will talk to you about maybe researching the company. Okay, yeah, let's research the company. We do that. You've seen that on these videos. I do that. But why are you in it right now? Why are you in the stock at $5 a share? Why, did you think to take it to that level? So when you take your questioning of why are you in the stock to that level, you realize you either are executing on an extreme discipline level, or you can improve your discipline. Okay? And I'm going to tie all this in together for you. Stay with me. I appreciate your patience. So yesterday's card was this right here. The P.E.P closed at, because once you have days like we could do this every day, 1 to 500, you can take care of your family and do this all day. You don't have to go nowhere. It wouldn't even matter the next lockdown. The next COVID can't go outside for 4 months. Had DoorDash, everything, wouldn't matter. You ain't gotta leave. Get DoorDash to pick you up some toilet paper on the way, and you're good. You know what I'm saying? Give them a $5 extra tip. Stop at the dollar store. Get you some packs of toilet paper. They'll do it. Just ask. All right. So this P.E.P yesterday closed at 680, right? And basically the volume increased. I said it would make it something I would want to watch today, and I actually carried 600 shares over, which is how confident I felt, because you guys know I haven't been carrying much of anything overnight for months now. So I was saying once established over 702, 728 to 790 will need some work, right? Then we'll see if 1043 is available tomorrow. So once we establish above 702, 728 to 790 will need some work. It will take some work to get there. And this is what today did. So I carried over 600, right? But now this is why I wanted to really spend time with telling you how critical research is, or can be, because the estimate that I gave. Well, here, let me go over the card first, and I'll get into it. So this P.E.P closed today at $6.58, which is down 22 cents after a high of 757. So, and I put the dollar signs there because if you watched my last video, this was prime execution, because everything I said, everything I was expecting this to do, it did within the zones. And that was part of the execution, which ties into why I'm going to give you these tools, which ties into why I'm saying you really need to research not just the company, but also why are you in at this dollar amount? Okay, stay with me. We're almost there. So it wants to actually get back at sit back at 695, which is only 10 cents up higher, but that's going to be like a sound range for it where you can feel comfortable and confident. Then the next zone we want to hold with it is 742 to 860. All right. Because based off the shift today, it may be flattening again, which wouldn't be a bad thing, because it would give you some nice stability. It'll be less volatile. And then once you see where it's going to rest at, it will be easy to decide how much you want to put in, and maybe wait a few days comfortably while you wait for the next surge upward. You see what I'm saying? Based off news or something that hits drives the stock price up. Okay. So it may be flattening again as the highs and lows have converged since yesterday, and the volume has decreased a little bit. And with all this situation going into tomorrow, I'm not really certain, because you got the announcement of the 1.2 trillion or 1.9 or whatever it is, $2 trillion. You got it being Friday. I don't know how the market's going to react to, because you got three types of people in reality. You got the people that's going to look at them just printing off trillions and trillions and trillions of dollars as a good thing, that they're trying to help the economy. You got the people on this side that knows the ramifications of that, and a lot of them are probably exiting the market slowly, which is what I've been telling you. I've been doing since November actually, because that's what I'm talking about. The conditions that we're in right now, it's the risk is higher than normal, and things are inflated. Okay, it's still opportunities to make and get gains, but you got to know what you're doing and be careful. Okay, that's why I've been telling you the whole time. And then you got the people in the middle that are impartial, either because they don't know the difference at all, or they just don't care, right? So with all that being and pinning up on this Friday, I don't really know how that's going to affect the market. So of course we want to see it go up. Play at your own risk. Know what you're looking for, know what you're looking at, and those could be the next zones we see relatively quickly. And of course we're still looking to go into that $10 range eventually. All right. So I won't overpromise for tomorrow. I'm just gonna say, watch what's going on and make your move. But yeah, this did exactly what I was saying. So what it was I carried over 600 shares, and then I set my calculations. I was saying, this is why I'd be like, man, I was off by 20 cents. You know what I mean? You'd be like, why is he tripping? Because he was, he predicted the whole stock to within 20 cents. Yeah, well, I also predict predicted, entry points down to a penny more than twice. You know what I'm saying? So those are great when you're within a penny of tolerance. If anybody that works in tolerances, plus or minuses, 5 thousandths of an inch and stuff like that, precision. So it's a huge difference between a penny and 20 cents. If you got 1,000 shares, 20 cents is $200. You know what I'm saying? So, all right. So I was thinking it would hold above $6. Like 6 would be maybe the bottom. So I had my stop limit like 10 cent, 15 cent beneath that, right? Actually, 10 or 15 cent. But I did a hard stop limit instead of a trailing stop loss, which is something that I really like because for me, we'll get into that in a moment. I can set the number myself, and if it trips it, I'm good because I lock in that like if I got time to watch it, it's really handy because if it trips it, I lock in that profit and I can see where I can watch it to see where it's gonna keep going down to, and I could buy back in whenever I want to, right? Sometimes it trips it and then it goes right back up, and once you realize that the P.E.P is still carrying it up, and maybe that was a moment thing. You can just buy back in, and maybe you miss 5 cent, 10 cent, 20 cent, 30 cent here, but in the grand scheme of things, you're keeping your risk relatively low, and your profit relatively high. So it's worth it. Who cares if you missed 20 cent if you made $2 a share? You know what I'm saying? It went up to 20, you missed 20 cent. So the fuck what? So it tripped my because of how it dropped. It held right around the $6, and then at one point it tripped it. So maybe it was like 20 cents, maybe it was like 5.80, whatever it was. It tripped my stop loss. So the thing about that is not bad, but I had confidence in the stock going up, and I didn't adjust the stop loss fast enough to where, because remember, this came into the day at like 650. It ended yesterday at 680 or something. What we say yesterday? Yeah, 680. So it came in lower. So you figure if you have 680 ending yesterday and you got a whole dollar stop loss on it, it might have been 580. So 10%, 68 cent. Whatever, you know what I mean? 15% of 68. It was something like that. Anyway, I had some room down here below $6, but it finally tripped it. And then the thing about that is this, right? It's a gift because if this had dropped all the way down to like $2 a share, like you would have protected yourself from losing, let's say another $4 rounded off a share, right? That's great, right? Especially if you got 1,000 shares. You don't want to lose $4 a share, right? So, however, in a situation like this, remember my red arrow from yesterday? I ain't gonna say it wasn't an arrow, but it was like a cone. Well, it's an arrow. I had that carried off like that to the distance for a reason. It serves a purpose for me, and maybe I'll explain that to you guys in the future. So make sure you subscribe to the channel. So that was like where I was anticipating the bottom of that downward progression to be. And so it came out of it during the you see it carried right through it during the after hours, right? This is where we were at. It carried on through it during after hours and into the pre-market, and then during the pre-market it actually left it and jumped out, right? However, when the market opened, it continued to drop down, and that point right there is only, it's like 20 cent difference. Excuse me. It's like 20 cent difference from that 550 where it actually bottomed out at. You see, so the limits help because, like, especially if you go out to work and stuff, you can't always pay attention to it. So it keeps you from having massive losses, but sometimes that protection, when you don't tighten all parts up, like I knew where the bottom was, but at the same time, that doesn't mean I wanted to lose all of that difference potentially. So you tripped out your stop limit. You find that the good thing is you calculate it fairly and right what would be the low for the day. So you kind of see when it starts to come back up. You see what I'm saying? So at this point, I was able to right there where you see that line touch the bottom blue, where it came up a little bit and then went back down, and then it starts to come up. The green line I drew based off of that bottom point and that red tip. And then when I seen it come below that and start to come back up all green, I was able to buy back in because it's coming back towards $6. You see what I'm saying? So that for me was a sign, because of my calculation, because of my knowledge of what I thought the price action was going to do. One, I didn't expect it to drop low, but sometimes you set a line and it dips slightly below the line. So technically 550 isn't that much below $6. It's less than 10%, plus or minus. Now, if you're a perfectionist, it sounds like a great deal, but in reality, to say it's going to hold at $6 and it touches 550 and then comes back up, that's still good execution. It gives you an idea of what you're looking for. You see what I'm saying? So when it dipped below 6 by that time, and it triggered my loss shortly after that, my protection stop loss, cool. Now let's find the floor of this thing and see where we want to get back in at. But what happens is that 600 shares, right? Because of that slight, and it was probably only so that red convergence point on the cone is 20 cents below the floor of where it actually hit. And my stop limit might have been 20 cents or so above that. Let's say 575, right? So let's say my stop limit tripped at 575. Well, yeah, it does protect you from falling all the way down to $2, and it might save you $4 a share. That's great. Now, where the precision comes in handy is because if I had got that calculation right, now I'm saying it's still right, but if I had perfected it and been exact, right, those 600 shares would have never sold. You see what I'm saying? And then what the anticipation I'm looking at is carrying those 600 shares, seeing where the floor is, and then when it hits that bottom and starts to go up for the day, to maybe throw another 1,000 shares on top of that. You see what I'm saying? Or 2,000 or whatever you wind up getting for the rest of the day, depending on how it moves out. So basically what happens is it's not a lot. It's that 600 shares. Let's say 600, you got in at like what were we getting yesterday? Like $5. Let's say 600, what's that? 3,000? Yeah. So $3,000. And it's not bad. It's just that's, if you were gonna put another 1,000 on there at $5, you would have had 1,600 shares that went from, let's say, $6 up to $7.40. You see what I'm saying? So it's not terrible, but the difference in that 20 cent off, as far as my execution goes. Now, somebody else, it wouldn't have mattered, but that would have been the difference of just having those extra 600 shares. Well, that we got in. Let's just take it back to $6. I mean, we got in before 6, but for mathematical purposes, let's just say $6. And from 6 to 7, we gonna say we got out before the 750 and a little chaos there after it dipped down once or twice. So $7.40, $1.40, that's 100. That'd have been 600 plus another 40, which would have been 50 would have been 300. So you're probably looking, let's say 240, right? So that'd have been another $840. So The error of 20 cent difference in my calculation was the difference between an additional $840. Now it would have definitely protected you in the loss, but 20 cent is $840 to me in this execution. So that's why you see me with all these lines, and when I say I spend 2 to 4 hours a day sometimes doing this, and that includes what it takes to make the videos for you guys and stuff too. So don't feel bad for me. This is what I like to do. You know what I mean? This is why I got rid of all the distractions in my life, because I'm trying to accomplish something, and sometimes you got people that just want to play, and if you go play with them all the time, you heard the story of this. What was it, the squirrel with the grasshopper and the nuts in the tree, and one was playing and one wasn't? I don't know. You remember the characters. You know what I'm talking about. You know the story. So you got things. You're at this channel because you got things you want to accomplish in life, and you don't want to make excuses, and you don't want to wait around for handouts from the government. You see what I'm saying? And I'm not saying that there's anything wrong, because we've all been in situations that we needed help before. But it's a difference between being in a situation where you absolutely need the help, and then getting and having opportunities like this, but you're just playing around instead. Like there's two different situations. You know what I'm saying? All right. So definitely help the people in need, but not everybody needs help. And because of that, it's gonna have a real impact on the economy a lot sooner than people think, and for much longer. So that's why I try to be as precise as possible. That's why you hear me saying, I'm 10 cent off. That because sometimes it works in your favor and it doesn't matter. Like today, it wasn't a big deal. I mean, yeah, everybody could use an extra $840. But when you're up, $1,500, $1,600 on a day, at the end of the day, it's a learning experience that I wanted to share with you guys as to why it makes such a difference. Okay. Just a little side note, DDD, you guys know I brought that to you early too. So DDD went up 850 today. It's down a little bit in the postseason, right? But 850 there for you if you had got into that. We was talking about that around $10. Like y'all could have got that. I hope you got all of that. If for those that like to ride along. So here's another thought for you guys. So I know you're looking at this like, man, that's $8.50. You talk about a stock that ended the day for $1.50. Well, if we go back to bingo, right? Because here's what happened. I had expectations on DDD. It was on my list to check, and I saw the movement. I saw the movement early. But you got to remember, even though this went up $8.50, what that means is that it was at 23, 24, 23.50. So this stock started today at like $23, right? So when I'm seeing this move and I'm seeing bingo move, and my target for the day was FRSX, I'm expecting movement there. I already see bingo moving, so I got the choice between going in at a $23 a share or having a field day with two $6, $5 stocks. Now, what's the difference with that? Let's say that we'll just use this number here at 32, right? I know it started off at 23, but let's just say like you're looking at why you don't hear me saying much about Charge Point anymore. Neo, we got our Neo at 55. It dropped down to right where we said it would. We could have jumped back in, but at that point, it's like, for what? The ROI is not the same. So I'll give you this as an example. $32, right? So you go, realistically, if I was gonna play this, I probably wouldn't. Let's say if I knew there was gonna be serious movement on there, I would probably go in 100 shares with the expectation that I would drop some more shares on top of that as it continued to climb. If I wasn't sure and I wanted to get in with this, I might go in 25. And then as it moves, I would go in like another 20, 25, and build up to 100. So what I'm getting at is 100 shares of this is $3,200, right? And let's say somehow you knew it was going to go 850. So you put $3,200 down. You made 850 times 100. So that brings you back $850. You feeling good, right? We just talked about $840 with a 20 cent. You see what I'm saying? So for me, 20 cents off was this whole day on 100 shares. But it's because I'm not dealing with 100 shares. You see what I mean? So now look at a $6 at let's say 581. That was the number I used. That was at one of these, either Bingo or FRSX. Had a low of 5. Had a point where you could enter about 581. So at $5 you get 581 shares if you catch it at 550. I think that's what I did, right? Anyway, what you're looking at, for the same money, you get 581 shares, and it goes up $2. Okay? So when you got 581 shares of something that goes up $2, that is $11.63. So the same money, you feel good getting 100 shares here for bring you back $850, but it's an all day journey, right? You could get 4 shares for the same $32 that goes up $2, and now you're right at $8. But the difference is you had 100 here, you got 581 there, so you wind up making almost $1,200 off the $6 share. That's actually got a smaller percentage move, right? So that means it's actually more likely to happen because it's a smaller percentage, right? And it didn't take you the whole day for it to move that much. If you timed it perfectly, you could have plugged in and been about an hour and a half, 2 hours, and been done for the day. All right. Now, if you double this, you would have got what, 1,700 here at the 3201 times 100. If you had 200 shares, you would have had like what, 1,700. And if you look at that 12, you would have had 2,400. The other one where you made roughly 1,200 off, you would have had 24. So you would have made $700 more, even though the stock was only 1/4 of what the value was of this one. So think about that. All right. So now in closing, this is why this is so critical. So now you did all your homework, right? You can't keep what you can't protect. You see what I'm saying? And that's where these two tools come in handy, right? It's a sell stop order. Is a type of stop loss order that protects long positions by triggering a market sell order if the price falls below a certain level. I use this a lot. I actually use this a lot more than a trailing stop order in how I execute. But the trailing stop order has got to be a close second place. And what that is a sell trailing stop order sets the stop price at a fixed amount below the market price with an attached trailing amount. As the market price rises, the stop price rises by the trail amount. But if the stock price falls, the stop loss price doesn't change, and a market order is submitted when the stop price is hit. So basically, the sell stop, right? When you put a stop order in, let's say you're at I'm gonna keep it simple. Let's say you're at $5. The stock is at $5 a share. And if you put a stop order in at 450, that means if it drops down to if it hits 450, it's going to sell however many shares you said to sell off. Now, how does that come in handy? Well, let's say you got in the stock for the day at $3. And you had, let's say you're on your lunch break, right? You're on your lunch break at work. You got your little sandwich, your drink, you're sitting outside, whatever. I don't know, right? Whatever you do, you're doing what you do. You find a stock with some price action right about the time. You did your research, did your homework. You see it's moving, right? Let's say you throw some money on it because you know what you're anticipating it to do with confidence. And you get in it at $3. Let's say it goes up. And by the time you get done lunch, it's at $5. Well, if you know you got in at $3, you want to give it some room to work. See, that's the tricky part, because you got to give it a certain amount of room to do its little bounce, right? If you get it too tight, it'll hit that real quick, and now you out, and then it'll keep working. And next thing you know, it goes up $25 that day, and you caught $2 of it, which is still not bad because you didn't lose nothing, and you're up $2, and now you want to learn, how do you make it? How do you capture more of that next time, right? Okay. So that's why these calculations and this homework is critical. Like you just saw, 20 cent could have been another 840. We'd have been sitting here talking about it was a $2,500 a day, which I'm not mad either way. And my goal is $100 to $500. And that discipline allows me to have days like this quite often. So with low input, like I don't have to have 20 grand sitting in the market to do this. We're doing this with a few $1,000s because it's all about time and execution. I mean, a few thousand in at that moment. Like I could have $5,000, $6,000, $7,000 worth of shares. It dip a little bit, I'm selling, but then I got reserves to buy back in another $5,000 worth if I see it going back up. That's why you got to have the ability to act when the opportunity is there. You got to have the opportunity to strike. You know what I mean? If you got all your money in the market scattered all over the place with this diversification bullshit people be telling you, diversify portfolio and have 80% of your money, then you tight. You can't make no moves. You locked in for days, for weeks. You hoping, fingers crossed, toes crossed. This way you're executing. It's quick. In comparison, it's real quick. Sometimes I'm up a G in an hour and I'm done for the day. All right, so the stop loss, let's say you're at 3. By the end of your lunch break, it went to 5. And you're like, you know what? I got to give it some room to work. I also don't want to lose all profits I just made. I'll be willing to risk 25% on the possibility it could keep going up and stay up, and maybe I'll catch it later on at a much higher point where I can sell it then. So you say to yourself, all right, 25%, I'm up $2, that's 50 cents. So I'm gonna set my stop loss for 450. So now I got room. So let's say it goes up while you're at work, you're out working, you're not even thinking about it. It goes up to 525, right? But then it slams all the way back down to 290. So on that way down, it's going to hit your 450 stop loss, and it's going to trigger, and it'll send a signal to sell at 450. Now, in reality, a lot of times it'll sell right at 450. If there's a lot of volume and stuff, you might get some sales at 450, 449, 448, most of the time it's pretty precise. I haven't seen it go, knock on wood, like you set it for 450 and it don't sell to 430 or something. But, I'm not saying that's impossible. So just know that it's not necessarily precise. It's not always guaranteed, but you want to set a trigger to sell. Now, the difference between that and a trailing stop loss is this. That same situation. You get in the stock at $3, it's going up to $5. We can use the same number, 450. So that 450 is 50 cents less. So that would be 10% of $5, right? 50 cents. So you could then say at that same time when your lunch break was over, you could say, you know what? I don't want to lose any more than 50 cents of my profits from where it's at right now. But I still think it could go up. And I want to capture those profits. And here's the thing. Okay, so I'll finish this thought and I'll tie it together for you. So you can say I'll put in a trailing stop loss to sell however many shares with a 10% trailing stop loss. That means wherever the stock is, you've seen it there, you read it there, I said it to you how I said it. But basically, if the stock goes up to $5 and then it drops 10%, which in this case in our example would be that 450 again, it would trigger your sale. And that way you still protect yourself from losing no more than 10%, which is great if you're up, almost 50 and the stock bounces around a little bit and drops 10% from being up 50%, you're still up 40% for the most part. Now, the benefit to the trailing stop loss is if it keeps going up above the $5, right? So the sell order goes along with it. So remember, it's going to sell off at 10% below that stop. However, that's at $5, so that would be at $4.50. So if it goes to $6, 10% of $6 is 60 cents. Now you're at $5.40 is your trigger. If it goes to $7, right? 10% of $7 is 70 cents. So now your trigger is at $6.30. So let's say, whereas your sell stop order, right, you would have set for $4.50. Now, if you come back and catch it at $7, that's great. You're going to have the same results. If you go, oh, snap, it's at $7. Let me sell now. You know what I mean? However, if you don't catch it and you have a trailing stop, right, it hits $7. Your stop limit is now going to be at $6.30 instead of the $4.50. You would have set it at with the sell stop order. You would set it, and that's where it would be at. So the trailing stop order now, 10% of $7.70. So your stop limit is at $6.30 now instead of $4.50. So you get to make almost a whole another $2 because the stock went up. And then if it drops down below $6.30, now it's triggered and you're selling at $6.30 instead of the $4.50 that your sell stop would have gave you. You see what I'm saying? So, however, on the sell stop, if it goes up to $7 and then drops back down to $2.50 after that, you're still going to sell at $4.50. So you're going to come back, you're going to see that it went all the way up here and then it came all the way back down past your sell stop and you didn't capture any of this up here. You're going to be good because you still made that $1.50 a share, right? But you're going to be like, damn, I could have made $3.50 a share. And that's the difference between a sell stop and a trailing stop order. These are pretty much the two I use, depending on the strategy. If I can be there to babysit it, I like the sell stop. However, if I'm not there to watch it, I like the trailing stop. Okay? So hopefully that helps you out, and that's how you're able to do this without, with low risk. But it takes a lot of, I ain't gonna say a lot, but it may be a lot for some, maybe a little for others. You got to put the work in because that's what allows me to know exactly why I'm in at this dollar amount, whether it's $5 or whether it's $20. Why are you in the stock right now? Of course, you need to know the company, but you also need to know why you're in at this dollar amount. Don't just buy a stock because it's $100 a share. Don't just buy Tesla because they said it's going to keep going up, because what if it don't? Or what if you get in on the day that it decides to take a 10% loss? Well, 10% of 500 is 50. It's not $5 where it's 50 cents. So, don't get in because somebody says so and then you're crying because the stock dropped $50 a share on you because you didn't know why you were in at that dollar amount. You see what I'm saying? So it's critical. Learn how to do this. We'll build on this other techniques and stuff that you see me got going on here. I know this look crazy, but it to me it makes total sense. It probably looked like some Cleon stuff, but that's okay. It's a little crane. If you look at it, it's like a little paper crane pointing to we get the money this way. All right. Nah. Hey, look, thanks guys. You've been great. I hope you learned something today. It's Pasha Pyro, YNet7, big board P.E.P for my peeps. Thank you for tuning the replay.